Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of NEO, ticker symbol NEO. And so I am recording this on Wednesday, October 1st. And there are some exciting things about the chart I wanted to go over with you guys, but I also wanted to note that, I'm just sharing my perspective, and you may or you may not agree with it, but really it's just to add context to what's going on with the chart. And I could 100% be wrong. I think the reality in the stock market is that everybody is always wrong. You never sell at the exact top, you never buy at the exact bottom, and so you gotta just work with it. And I do think that the market tends to fake and shake us out a lot. And, I think my last couple of videos kind of annoyed some people. So I'm sorry about that. But yeah, it's just perspective. And part of making videos on YouTube is you got to have, exciting titles and whatnot. And yeah, but that is also the algorithm that takes advantage of us in the markets here. But anyways, enough rambling there. I did want to share that the reason why I'm putting out this video is because I did put out a poll, got 13 votes, which is more than I typically get on the channel. So thank you to those who participated. And so, this is that NEO video I'm doing tonight. I'm tired, but I'm happy to do this for you guys. But now that I said that, I am doing this video. There is no crying aloud. So, the saying, if you don't have anything nice to say, don't say anything at all. If you want to share your comments, your thoughts with me down below, do it. I'd appreciate it. But try to be respectful and know that, I'm just sharing my opinion. That's all that it is. And my opinion, really the reason why I put out that poll is because yesterday on September 30th, I checked when I was at work. So I wasn't like in the zone or anything, but I checked the max pain for NEO, and it looks like the max pain increased for this coming Friday, the 3rd, from 650 to 7. So that makes me think things are pretty good. However, on the 30th, max pain was still 650 for next week, so October 10th. But then today, on October 1st, I was at work, I checked, and I wanted to update on X here. That max pain is now $7 for this coming Friday and next Friday. So that does make me think that NEO could be moving to the upside. But there are some things in the chart that, make me a little bit concerned. So I will go over that. I'll also go over what I plan on doing or what I have done towards the end of the video. But coming here, looking at the chart, I'm going to actually look at not only the daily time scale, but also the weekly and the monthly, since we just put in a weekly and a monthly close, so we can look at those. But looking here at the daily first, this is stuff that I've talked about in the past, is that we do have higher highs in the stock price here, but then we also have lower highs in the RSI. Not super steep slope here, but it's still, lower highs in the RSI, higher highs in the stock, and that is going to be bearish divergence. So something to be considering, something to be cautious of. And if we do take a step back to the longer time frame, we can see that, over here, we did have a higher high and a higher high. So there's no bearish divergence, but we did, consolidate with a very slight pullback before the next leg up. But from here, from the high of July 23rd, we have put in higher highs. We have put in lower highs in the RSI, bigger time frame, that is bearish divergence, so good to consider that. But speaking of larger time frames, let's flip over to the weekly. And what we can see over here, which I think is, perhaps going to have more weight in whether this is a bearish or bullish signal. On the weekly, we see higher highs in the stock price, but look over here in the RSI, we do see higher highs as well, so there's no bearish divergence there, although it does seem like it's getting kind of exhausted here. So the highs for, I guess, Monday, August 25th on the weekly, The RSI was at 74.49, but then it went up a little bit higher to 76.11. So that is in the overbought territory, but it could get up into the 80s. It could get up into the 90s. So there could be another big move to the upside. And then taking a little bit more of a step back here, we can see the high over here from, it looks like, September of 2024, I guess Monday, September 30th. And we can see that we have put in a higher high in the stock price over here. We've also put in a higher high in the RSI. So there's no divergence there, no bearish divergence. So I do think that is a good look. And, this could be an inverse head and shoulders pattern. I've talked about that, I believe, if I show the drawings, which are going to be a little cluttered. We do have, the left shoulder here, the inverse head here, and maybe we're going to put in a right shoulder. I don't know. Maybe we just, break above this with volume. I have no idea. But let's see. Thinking about that, let's flick over to the monthly. And so I think that this looks really good. We haven't, we just started only 1 day's worth of data here in that little red candle there for October. But looking at this, it looks good. So I could definitely see NEO going higher, but I could also see a pullback, a little bit of a retracement on the way. So like long term, I feel like NEO is a safe bet to be bullish on, but in the next month, weeks, couple months, whatever it is, maybe there's a little bit of a pullback. So I think it's good to, just have a plan if that happens. However you want to manage that, you do what works for you. I'm doing what works for me. And sharing my thought process in these videos helps me out a lot. And so, hopefully it helps you out as well. But what we can see that I do like about this is that we have stair step up in volume increasing as we do have price going higher with each month not only closing higher, but closing higher than the previous month's high. So I think that looks really good. However, and maybe if we look at percentages, I'll be corrected, but one thing that does stand out to me is the spread of this candle here for August. Looks like it's a wider spread than what we saw in September. And so that does strike me as, there's a little bit of divergence because we have the stair step up in volume, but this is actually a smaller step up. And so that volume, more effort was put into pushing the stock price up. So I think that what we could be seeing in October is maybe a little bit of a rollover, or maybe it's the last push higher before a retracement. I don't know. But I think that is something to just be noting. While this does look really good, it looks really strong, it does seem like it might need to take a break. So something to consider there. But anyways, talking about that, let's look at the percentage moves. So for July, stock price went up by about 42%. It looks like 41.98%. So that's a pretty big month. July was great. And then looking over at August, we actually saw it only go up 31.01%, even though that spread of the candle looks bigger. Percentage-wise, it's actually a little bit smaller. Just starting from a higher number, you need to percentage-wise be putting in, a much more notable spread in that candle to get a higher percentage spread there. So it's about 40%, about 30%, and then let's look at September. It's not 30%, it's actually 19.44%. So percentage-wise, it is smaller. And actually, since I am talking about percentages, let's also talk about dollar amounts. So coming back again to July, price went up by $1.44, which was about 42%. In August, price went up by about $1.50, $1.51, and that represented 31.01%. And then in September, price went up by $1.24. So, each month is more than $1 up, but it was 144, 151, so increasing, and then 124, so a little bit of a decrease. So maybe that is suggesting some weakness, that it could be pulling back. And, I know people don't want to hear it, and I'm just trying to think about, levels to the upside, different possibilities. I'm going to fast forward this to the present. And actually, I might remove my drawings just to talk about it so it's a little bit cleaner. And so, the level that stands out to me without any of the drawings, very basic, is just going to be the 50-day simple moving average. Whether it's the SMA or MA, they should be the same thing. You can put it up on your chart. Just make sure it's the daily. And so I have mine fixed on the day, so it doesn't matter if I look at it on the daily, on the weekly, that is still the same number there. 586 on the weekly, 586 on the daily. So that is a level that we could be pulling back to. I believe the last time I did a video that was around 550 or 560. Now it's at 586. Maybe it moves up to 6. Maybe a price pulls it back to 6, somewhere around there. So that's a possibility, but it could keep going higher, and I will present that possibility in a minute. One level that could be acting as support, if maybe it's just, a wick down, just within one day, and we bounce from it. But that would be around like 670 where the cursor is. That's just based on, let's see, the open price from August 25th. That was at 670, or you could have fun with it and make it 669. That's something that I would do just because I'm kind of an idiot. I like to have fun with the numbers. Otherwise, it's just boring. And the idea is that, it's going to go a little bit lower than, that level. If you have, like, let's say a limit order placed there, it would pierce that. That's how you get the fill. In AMC, I am a shareholder, and I have talked about price coming down to 280. Price came down to 280. I had a limit buy order at 280. It did not get filled. So, maybe it gets filled tomorrow, though. Who knows? These things can be volatile. But yeah, 670, I could see price pulling back to that, finding support where there was previous resistance. That makes some sense. And really, I would say that this is in, a bullish trend as long as we hold higher lows. And so over here, the low from September 23rd was 677. So it would be good to be not going any lower than that. But if we do break it, I don't think that's too big of a deal because we have the bigger picture low here on September 10th. That was at a price of 560. So as long as we're staying above 560, I think, maybe we could get a shakeout, sweeping the lows. Maybe somebody has a stop loss at the low from September 23rd at 677, or maybe at 669 because, they're a degen, they're an idiot, like me, and they like those fun numbers. But then it sweeps the lows, comes down there, shakes everybody out, and then goes back up. As long as it's holding above this low, September 10th's low of 560, generally, I think that this is probably just going to keep going higher. We could even probably draw a trend line there, and maybe I've already done that. No, I have not. I've got some fib retracements, and let's see, I might actually delete some of these. I might clean these up. This one doesn't look like it's valid too much anymore, or at least we did pull back to the 382 at what price is that, 689, and did bounce from there. But maybe we come back to the next level down. That would be around 660, 664, something like that. But yeah, I don't want to have all this clutter, so I'm going to delete that. And this other fib retracement, let's see, we have already, gone to new highs. So I can delete that one as well. Otherwise, I'm just kind of, trying to guess where the new highs are. And by the way, I should note that the highs for today, October 1st, were 790. So congrats to those who've had conviction, who've still been holding. It has gone higher. So good for you. But yeah, what I wanted to do, I'm trying to remember what I was thinking about. Yeah, just kind of want to draw a casual trend line here from the lows of July 8th, coming through the lows here of August 14th. And yeah, we didn't really test that. And on the 11th of September, the 10th of September, right around there, we actually came a little bit higher. So, maybe, we come a little bit lower than that to test this, or maybe we come down to that level, form a double bottom while retesting this. Actually, that wouldn't happen. It'd still be higher than the lows here. So we could come down to test this, maybe around $6, like I said. Another thing that I could do is draw another trend line from the lows here up like that. And so maybe there could be a pullback to around $7. And that does actually match up with what we're seeing in the max pain. So I will pull that up in actually just a second, but I'd rather, go over the chart a little bit more. And so what we've seen here, multiple occasions, move up, consolidation, move up, consolidation, move up. Now we could be moving up after this little bit of consolidation, but like, what are some things that kind of stand out as being different about what we're seeing here? So like, even from over here, this move up, this consolidation, we were putting in lower highs, a downtrend, and then we broke above. And that was actually a downtrend below the 50-day SMA, broke above, moved up to around $5, and then started to consolidate. And with that, we started to put in, lower highs. I think this high might have, no, it was still a lower high, lower highs. Actually, I'm going to check that because I might be wrong. The high here on August 1st was 506. The high here on August 11th was 501. Yeah, so lower highs, consolidation, and then a break above. Again here, very steep. Lower highs, consolidation, break above. But now what are we doing? We're putting in higher highs. So there is a little bit of difference there. So that makes me a little bit anxious, especially because RSI is not, on the shorter term, not putting in higher highs. But something that we can do, I'm just going to do this real quick, is just some Fibonacci extensions. What do we see play out? 100% move is the distance from the low to the high here from this consolidation low. And then the 100% move is that same distance from here to here, but taken from that consolidation low. That was around 160. And so we got that. We didn't get up to the 1618, but we got that 100% move, and then we consolidated. Okay, and so we got that in our minds, 100% move to the upside. And so let's do that again. Fibonacci extension from that low to the high, and then the consolidations. And then we did see nearly a 100% move up to that. And actually, it looks like that's what I've got drawn up there. Right there, right around $8. And so we haven't really hit that just yet. But so from here, this move up and consolidation, we got more than 100% extension, Fibonacci extension to the upside. But then following this consolidation, we haven't yet got 100%. Again, that would be right around $8. But if we do kind of consider that, that might be happening again, I'm going to actually just delete this. So we got an idea. We almost got to the 100% around 8. And so actually, before I do that, since I do have this still drawn up here again from the low here to the high here, and then this dot corresponds with the low over here. And so from that, I've got the 100% up there. Let's actually add the 786 just so. That's another level. We pierce that. And so from here, this consolidation and move up, we pierce the 100. From this consolidation move up, we pierce the 786. So then maybe the next fib retracement, we wouldn't get to the 786, but we might get, fib extension, then we might get to the 618. So let's consider that. So from the low here, from September 10th up to, again, this is why this doesn't necessarily look so good, because it's the high here on September 19th, but we went higher than it. Volume isn't super high, so, maybe that's a good sign. It's just consolidating. But it also tells me that, there's not really enough pushing it higher. But yeah, let's just say, from the high that we hit today on October 1st, then I'm just going to kind of go backwards in time to the low from like September 23rd, lining it up over here, but into the future. And then we can, take a step back, get an idea. So that's 786. I'm going to delete this one here, but that 786 from the one I just drew is around 856. But let's say we don't get up to the 786, just like this last run, we didn't get up to the 100% yet. So I am going to add the 618. And so the 618 would actually put the price target around like 819. So again, it does seem like it's getting kind of exhausted. So I think that is something to consider. As you might be able to tell, I'm just a little bit cautious. I'm a little bit anxious with this because it is doing something different than it has in the past. And, in all honesty, a lot of the responses from the last video that I put out on NEO, very nice, very supportive, very just sharing your opinions, being nice. Some of them were downright disrespectful. And that is just like, people getting overly emotional. And that, like emotion is like leverage. And when people get to leverage, that's when you get squeezes in the other direction, And so I feel like people are getting, it's just been like so many pumps in NEO. They just expect it. How could you be bearish? How could you expect there to be a little bit of a pullback? And that's when, people get liquidated or people, their emotions get the best of them. And so that's one aspect of it. But yeah, I think that this could be going up to 8, which is not really much higher. The high today was 790, so rounding, that is 8. But let's look at some options data, and then I'll pull up the max pain and then talk a little bit about, let's see, what I am doing with NEO. And so what we can see here is this is the net call and put premium for the date up here, October 1st. It's also over here, so you can see that. But what we have is net call premium up by about $500,000 today, so that's good. However, we actually saw net put premium higher, about $770,000. So while net call premium in green here did go up to about $1 million, a little bit over, it did pull back some. And in that time, the net put premium went higher. So overall, while it's not too extreme, this doesn't really stand out too much to me. If we do look at the bear bull slider just above my head here, 41% on the bearish side, which is actually, it's more bearish than bullish. That's kind of factoring in this neutral area. And that the bearish side is about 6.64 million, whereas the bullish is about 6.38 million. So just something to consider. I would say this is more or less noise. This doesn't really stand out too much to me. But let's actually, look at the past 2 days just to kind of give us some perspective. And, again, it just seems like it's kind of, up and down, not too crazy. But yesterday on the 29th, at the end of September, the 30th, the end of September, we saw net call premium up over $1 million. It's actually maybe a nice way for me to do this is just rewind up here. So we see September 30th, and we see net call premium ended up at 1.06 million. So over $1 million, that's good. And net put premium came down by over $500,000. So, the calls, that net call premium is going up. That seems bullish. Net put premium going down. That seems bullish as well. And we actually see the bear bull slider here, majority on the bullish side at 50%. So 9.96 million on the bullish side. The bearish side, 8.34. 8.34, yep. And so, yep, something to consider there. But then, I'm going to bring this back to the first, and I actually want to go back 7 days just so we can compare the past 7 days. And with this, the squiggles that we were just looking at, so from the 1st of October and the 30th of September, they actually, kind of scrunched. They don't really look that impressive, even though, premium yesterday was over $1 million in net call premium. But the thing that really stands out to me, again, coming back to this, on the 23rd, the last half an hour, I think last 15 minutes of the day, we saw net call premium drop from being positive to being negative $9.06 million. So that doesn't seem so good. And that kind of skews the chart here as far as the premium goes. The yellow is the stock price. That's, kind of been consolidating, going up a little bit. But this net call premium plummet really skews the chart to make the most recent premium not look like it stands out so much. And so anyways, I'm going to go back actually one more day. So just Rewind 1 day, so we see from the 30th going back 7 days, and then we see that big drop. This was the first big drop in net call premium, down negative 13, or I should say down $13.13 million. So again, really just kind of shrinking the premium that we're seeing over here as being not that notable. So yeah, I mean, I still find this to be a little bit concerning. I would be less concerned if I saw net call premium going up by millions of dollars, not just $1 million. And over here, I did see a lot of this green volume. This was on September 25th. Net call premium ended the day at 1.86 million. So, pretty high, but relative to these massive drops, not really that high. So I do think that is something to consider. I think that is something, just to factor in whether or not options are a part of your trading. This is just data. And so I think it's interesting to see what people with the leverage, options are a way to get leverage, how they are trading. Maybe they know something, 13 million. I don't have 13 million or 9 million. I don't even have 1 million to be throwing at this stuff. So you take notice when you see stuff like that. But anyways, thing I wanted to mention, just coming over to the Greeks here, didn't realize, I just found out there's a little button up there to pull up the, max pain. And so what we can see, just scrolling down here, is the max pain for this Friday. So on October 3rd, max pain is now $7. I've talked about it in the past. Maybe you guys remember that it's been $6.50. It went up. And so that's good. And then for the 10th, that was also $6.50, but that has gone up to $7 as well, like the post from X over here. And so I think that's looking really good. Price is, around $7.68, above $7.50, so a strike above this max pain. So I think that's good. However, I think that max pain is eventually going to get pushed higher than the price. And then price is below. So, I mean, you can think about this in a bunch of different ways, and it's all, where's the momentum? And so if the stock price is going up really fast and max pain is lower, that makes me think that there's a squeeze either occurring or going to continue to occur because max pain is trying to catch up to price and it's not able to do that. It's trying to pull price down and it's not working. Eventually it will work and price will come down to that max pain. What we have right now is actually price is going up. Max pain is trying to catch up with it, basically just what I was saying, and eventually it's going to catch up. If max pain ends up surpassing the price, like if price comes down to $7 for this Friday, then maybe that max pain is going to actually serve as a weight to kind of push the price down. So I think that's something, good to factor in. Also, October 24th and 31st for Halloween, max pain is $6.50. So I think it's going to be good to kind of keep an eye on those max pains. If price is starting to come back to max pain, that makes me think that, bears or market makers, whatever, have more control than the bulls. And so I don't think that's looking as great. And then also for November 21st and then January 16th, so monthlies there, we see that max pain is $5, $4.50, and then into February, $5. So those are months away. So maybe those end up going higher. I really don't know. But I think that this is good so far, but things can change in a day. Always looking at new data, always trying to factor in. But if stock price starts coming back down to 7, I had talked about the selling of puts. The selling of calls with a strike of 550, and there was also some at 350. That's not necessarily suggesting that price is going to come down to 550 or 350. It's just that those people who had those calls are taking their profits. They think price is going to kind of settle out and maybe pull back some. And so whether it comes back to, I don't think it's coming back to 350, but 350, 550, 6, 7, whatever it is, I think that, it could be coming back to 650. Kind of because of this strikes here. that seems feasible. That's dropping by more than $1. So, I mean, if you're bullish long term, don't sweat it. Don't worry about it. But, I think that, that could be a good thing to keep in mind. Do you want to be buying up here around 8? Or would you rather, maybe a little bit there and then maybe wait to see if it does pull back, have some cash on the sides to add there. So, it's like whether you trim up here or you just hold or you buy a little bit less with the opportunity to buy more on a pullback, totally up to you. You do you. I think that this generally, the chart looks like it could be going to 10. I still feel like that, but I think there could be better opportunities to add lower on a healthy correction on the way up to 10. And so kind of on that note, I am rambling a bit. It's about a 30-minute video so far, but I wanted to share what I'm doing or what I've done with my NEO position. In all honesty, I was starting to think that, hey, it's pulling back. And I guess I'll pull this up in a second. I'll keep up the chart. It's pulling back some. I don't really know that it's going to be going higher because I saw that like nefarious drop in, oops, this is not what I want over here. Let's see if we go back 7 days. So we see this $9 million drop and the $13 million drop before. That was really nefarious looking to me. It made me feel a little bit uneasy. And so I shared that in a video and got some backlash. And, seeing this in the data here, feeling like the chart's getting a little bit exhausted with these higher highs in the stock price, lower highs in the RSI. I don't want to because it hurts. But I'm going to take some risk off the table. And so what I did is I kind of incrementally trimmed. I actually could have done this better. Of course, everybody can always do it better. That's the way the stock market works. You never trade perfectly. But what I ended up doing, I'm sure you guys might not like this, but I'm doing me, you do you. I sold all my NEO shares. I could have sold them higher than I did. But the reason for that is because I feel like it's probably going to pull back. It might be a month between now and when it actually starts to pull back. I have no idea. But, I just want to take the risk off the table. I've always been a little bit uneasy with NEO because it is a Chinese company. Not to say that Chinese companies are bad. It's just that there are more variables that you have to deal with that. I mean, even with, the U.S. government shutdown right now. I mean, that's, U.S. has its own problems. And then to, be dealing with businesses in other countries, especially ones that don't necessarily have the best relationship with the U.S., I think that, there's a little bit of concern there. And so I wanted to take that risk off the table, but I wanted to keep some chips on the table because I still feel like this could be going to 10. And so rather than leaving all of my shares on or trimming some of my shares, leaving some on, I decided to take all of the shares off the table. That's more cash than selling the call that I have. And so that's what I wanted to go over here. Though it's just one call, so it's nothing that big or impressive. But this is the $10 strike call that expires in June. I've talked about it before. And, I'm holding this very comfortably. I'm not worried about it. I just have one contract. So again, it's kind of lame, but that's the way that I try to manage risk with options. I take profits on the way up and I try to hold one to see what happens. And so this is my one remaining contract. I had bought it. I believe my average is 32 cents. The high today, and actually the high as far as all the data that we can see here, the high for today was $1.41. So that's 100 shares represented in that one contract. So that represents $141. I didn't sell at 141. I don't plan on selling at 141 or 150 or anything like that. I plan on just holding. It has to come down a lot to come down to 32 cents. And if it does come down to that, if it goes to zero, I lose $32. Not a big deal. I've made more money on this exact same contract, taking profits on the way up. So I'm not worried about it. I'm not sweating it. And I believe actually, at 141, I'm up like, 4x, something like that. And yeah, I want to see if I can get it to 10x. I want to see if this premium can get up to, $3 and some change. And so I'd rather keep those chips on the table to see if I can get a 10x without having so much of my own personal risk. having 100 shares or however many shares, that's, more than $141. But at the same time, this $141, I only risked 32. So yeah, I mean, it's like I can hold this and not sweat it. If price does pull back, like I think it might, then maybe I want to buy more of that contract, or maybe I want to re-enter a share position. Maybe that's at 7 around where I sold. Maybe it's at 650. I have no idea. But, the only way that you make money in the market, I mean, you can make money, long term. There are many ways to make money. There are also many ways to lose money. But the way that I want to make money, the way that I am trying to get better at making money in the market is by swinging, by taking profits, by re-entering, exiting, whatnot, all of that back and forth. Same stocks or not. And NIO's one that's fun to follow. And so, I want to be in a position where if it does pull back, I can reestablish a position. And, that might be just a few shares. It might be hundreds of shares. Who knows? For me, I'd probably be a few shares to start and then maybe build up to 100 or so. I'm a small fish. But, if it doesn't pull back, I've got that call and I'm happy to ride this up to 10 or whatever. Yeah, I mean, look at this channel, I got to pull this up on the log scale. I mean, this is just looking phenomenal, but nothing ever goes up in a straight line. And, I mean, I could see this going up to 22. I could see this going up to 30, but maybe it takes a year or so to do that. And so, I mean, if your style is buy and hold and you've got conviction in this, then that's cool. Then don't sweat it. Don't worry about what some guy on YouTube says about it. His thesis is different than yours. His strategy is different than yours. My emotions, I mean, I'm not going to refer to myself in the third person anymore. My emotions are different than you. My psychology is different than yours. So, I mean, we're all different. Overall, long term, I think NIO looks great. I think it looks phenomenal, but there are squiggles on the way up, just like there were squiggles on the way down. There are opportunities to make money on this short and long on the way down. There are going to be opportunities to make money on this up and down on the way up. And that's where I think it's going long term. So don't sweat it. I'm just trying to understand the market better on a daily basis, looking at the data and sharing what I see with you guys. And yeah, I mean, it's like I'm trying to understand it. And if my attempt to understand it doesn't make sense to you, maybe I'm wrong. Or maybe I'm early, or maybe I'm late, and maybe you're early. I don't know. Who knows? But yeah, I mean, I'm just trying to literally have fun. I have fun doing this. And so hopefully this stuff's helpful for you guys. If it's not, then don't watch. You don't have to watch. I just hope that it's helpful for giving some perspective. And my perspective is NIO is likely to go a lot higher. And the only target I feel comfortable with right now is 10 within the next year, the next 6 months, something like that. But I think it could go a lot higher. But I also think it could pull back to sub 6 before then. And so I want to have that edge. That's what I'm trying to do. That's why I make these videos, because the market's dynamic and it's fun to try and understand it. And I understand and I appreciate that I am going to be wrong the majority of the time if I'm picking a penny or a dollar number. But the general trend, I think it's up. So I want to sweat it, Hopefully this is helpful, entertaining for you. But as always, those are just my thoughts. If you found them helpful and entertaining, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And make sure you tune into my after hours updates. I'm going to be trying to do them every day during the week. Next week, it's actually going to be market hours updates because I'm at work in the afternoon. I can't do them after hours. But yeah, thank you so much for all the engagement, the views. I really appreciate it, but know that, the stock market and YouTube are different things. I'm trying to navigate the stock market and communicate that with you guys the way that I do that on YouTube to get views. Maybe you don't agree with some of the way that that's phrased. I'm learning that. This is all a learning process for me. Somebody actually commented that, I have thousands of people that watch the videos. Thousands of people don't typically watch my videos. I'm lucky if 100 people watch one of my videos. And my channel is actually really small. The only reason why I still make these videos is because I enjoy doing it. It's actually not a like financially viable thing to be making content for this channel, but I'm trying to grow it. I'm trying to do it. And yeah, I mean, hopefully it's helpful. This is enough of a ramble. I'll see you guys in the next one. Have a great Thursday, Friday, and I'll see you, in the next one. Take care. Bye.